But that borehole mining, I think, is going to be something that people are, even though they think it's a technical risk right now, my gut just tells me that it's going to be something that is going to be viewed as a real opportunity. I think as inflation comes along, you're just going to see a rotation even more so into the commodity sector. And the technology, that's going into these EVs is just too good to ignore. I think you're going to see it all here in the US. And as soon as that crack in the dam appears, forget about it. The dam's going to burst. My point is, I don't think there's any turning back. The technology is just too good with the lithium.
Thank you so much for joining us for an end-of-year wrap-up for Nevada Lithium. I'm very excited to have with me CEO and Director of Nevada Lithium Resources, Stephen Rentschler. Steve, how are you today?
Doing okay. Thanks very much, Romeo. How are you?
I'm well, thank you. Now, the name of the game today is end-of-year wrap-up for 2025, but also with an eye towards 2026. So that's the topics we'll be covering today. I've got some questions just to guide as much as possible, but really we're here to hear from you and the Nevada Lithium story. Now, in the chat in the bottom right of your screen, please do feel free to ask questions at any point during today's event. We'd like to get to as many as we can. Some have already submitted over email, so I'll weave those into the discussion as much as possible. But really do appreciate you guys joining us today for this kind of end-of-year wrap-up. It will be recorded also for those of you in the room, so it'll pop in your inbox in probably about an hour and a half. I really encourage you to share that around. It'll be on our YouTube channel as well. Please do disseminate it as far and wide as you'd like as soon as it pops out. But enough of me, we're here to listen to Steve. So Steve, as we close out 2025, what would you say, just if you could, are the 3 top accomplishments for Nevada Lithium this year, and how have they positioned Bonnie Claire for success in the future?
Yeah, well, as always, I'm probably going to deviate from the questions. And first, just let me say thanks to everybody for taking the time at the end of the year. I know everybody's trying to wrap things up. Whether I can list 3 or 5 or 7, I think is sort of, it's in the details right now. Obviously, the PEA that we released back in August is something that I think puts us head and shoulders above everybody else in Nevada. And I'll tell you why I think that's really important going forward. And this is typical with sort of the way I think about things. I like to wrap the micro and the macro together to help everybody sort of see, I think, the unfolding story, and particularly to give people hope when you've basically been in a beaten up sector, which obviously we have been. I would say what I like people to, and just the way I'll start is just say, obviously, I think we're terribly undervalued, sitting here at 17, 18 cents, whatever it is today, market cap, 30, 40, $50 million for the asset that we have with the level of work that's been done on it and the future value that it represents. As far as I'm concerned, I've yet to see another PEA, PFS, feasibility study in Nevada that can stand up with ours across all the different facets of the spectrum, whether it's mine life, whether it's IRR, whether it's payback, whether it's expandability, all of these things. This is a world-class project. It's something that will move the needle for the very biggest of companies. It's something that has a tremendous amount of optionality. Which is something that I've spoken about a lot of times. Is when you think about de-risking projects going forward, the number of ways in which you can either gain additional value, ways in which you can reduce costs, all of these sorts of things are you just keep putting them in your hip pocket, right? It's like the bank of goodwill. You keep making deposits because you never know when you're going to have to basically make a withdrawal. But over the lifetime of developing a project, you want to have as much of this optionality as you can embedded into the project. And that's something that we've also continued to do at Bonnie Claire. So, we're sitting here now in a world where gold is whatever, 3,400, silver is at 66, copper's at, 5+, I don't know where it is today, 525, and nobody cares about lithium. But if you've been watching, you'd see it lately that lithium is year to date up about 35%. These are Asian prices. Doesn't mean a lot. I understand in terms of, the way it's going to, I think, evolve into a Chinese, non-Chinese pricing mechanism. But nevertheless, up 35%, arguably up, I think, 65% off the lows midsummer, with some very encouraging signs that we have made the bottom, least of which is, one of the largest Chinese lithium suppliers, the chairman talking about the fact that he's looking at $20,000, $25,000 lithium next year based on unprecedented demand coming from battery storage, which is a relatively new story when it comes to lithium. And I think what's taken everybody by surprise is the acceleration in that growth. And when you talk about a market which is very tightly balanced. And again, this is a nascent industry, right? This is not the copper industry that's been around for 100 years. I would argue that lithium over the course of the past 5 years, going from say 500,000 tons lithium carbon equivalent in terms of supply to last year, or well, let's just say by the end of this year, 1.5 million, somewhere in there, 1.6. And then now having to grow to somewhere again by 2030, to 2.83 to 3 million tons a year. I've talked about this many times. That is a tremendous hurdle to have to overcome. And that's before you even talk about the bifurcation of the market. Hey, what can have basically Chinese fingerprints or ownership on it and what can't? So I'm sitting here looking at this, obviously waiting for people to pay attention, trying to get people to pay attention. I'll tell you more about the company specifics in a second.
Sure.
But, I would want to frame the backdrop with, people get very concerned about EV sales. EV sales, across the world year to date have been up 20%. Most of that's China. North America is relatively flat. Of course, in the US, we've had the EV tax credits that were basically thrown away by the Trump administration. But anyway, the rest of the world combined is up, I think it was up 48%. And when you put it all together, you're basically moving and have been moving at a compounded annual growth rate of 20+% for the last couple of years. I would argue that's basically spot on to what the high level of projections were starting 4 years ago. I started at Nevada Lithium about 4 years ago now. And I remember, again, telling people this is the kind of penetration rate that we were expecting. And again, remember, folks, this is without Chinese EVs in the US markets, right? This is non-participation. So what happens when that technology makes it to the second largest auto market in the world? That's the US is. China's number one, then the US. I would argue that the growth is going to come sooner or later, just simply because the technology is too good and US consumers will want it.
Sure.
Yesterday, we saw yesterday Ford said, hey, we're going back largely to gasoline engines. They've got to get everything sorted out. I don't think that's really a great surprise to any of us who've been watching it. People didn't want to buy $120,000 EV pickups. However, they will buy, luxury cars. They'll buy affordable cars. They'll buy mid-size SUVs, all this sort of stuff. And Ford's got to work itself out. I will tell you, I thought it was very interesting, too, that the two battery plants that they had a JV with SK on, one's, I think, Kentucky, one's Tennessee. Ford's keeping one of them. They're going to keep making batteries. They're going to do the Tesla thing. They say they're going to make power walls, right? So you take the stuff home for battery storage and use it to charge your cars until they get their act together with the actual vehicles. And SK On's going to continue with their other one. They're all using Chinese technology. This is whole lithium iron phosphate, CATLs. So my point is, even if the cars aren't there, this whole thing that's going on with the AI centers, is just tremendous. And just to give people sort of an understanding, I think, of what's going on, you've got to divide it into different segments. So we used to think about a battery storage as, well, it's just uninterruptible supply, right? So it's more than that, though. It's not like what happens if the grid goes down, the solar stops or whatever, and your batteries kick in. Evidently, what's going on with these data centers is that the energy fluctuations, right? As these things start to compute, they go through their iterations of learning, queries, all of this stuff. It's just these massive fluctuations that need to be basically smoothed out. And the batteries, the battery storage systems are basically there to take care of it. So it's everything from monitoring and basically changing voltages to providing uninterruptible supply. And they're talking about the amount of electrical generation over the course of the next 5 years in the US is going to be dedicated to these AI centers is going to basically double or go up 150%. And I'll just, I'm sure I'm not telling anybody who's, whether you're an apartment owner or you're a homeowner, what happens when you start to have brownouts or anything like that when you stress the electrical grid, right? Things start to fall apart. And these AI data centers are arguably the most sensitive users of electricity that's out there. They need to have the batteries there to make sure that that kind of stuff doesn't happen. So I think people are really overlooking some of the consequences, the unseen demand that's actually going to be here from these AI demand centers, as long as they get built. And of course, it's a huge fight going on in the US, and I think it is probably in other parts of the world, but it looks like it's going ahead. So if you couple that again with the growth in the EVs, let's just say they keep going 20% a year. I still think you're going to have manufacturing JVs with U.S. auto manufacturers and the Chinese, minority ownership for China so that they can build them in the U.S. Everybody knows there's way too many Chinese car companies right now.
Sure.
A lot of them are not profitable. They want to get into this market. They will have access if they come in the JV with, say, Ford or GM or whomever. All it takes is a little bit of extra demand to throw this entire supply-demand thing totally out of whack. Arguably right now, people are saying we're either balanced, slight surplus, slight deficit. I don't know what the truth is. I think it's fairly close. I'm very convinced that the Chinese have been manipulating prices for quite a while. They've done this before. We saw it in rare earths 15 years ago, all this sort of stuff. The point is, at what point can we continue to count on supply coming on quick enough to where it is not, it's just so obvious that there's a deficit. There's no way around it. I would argue you're starting to see this with the prices that have been inching up currently. Again, Asian spot price, I think it's $13,700 is what they're quoting, up 35% year on year. That brings me to another interesting topic about the macro, and then I'll tell you again everything we've done at Bonnie Claire.
Right.
But that is that, what we've been hearing since we released the PEA is, why you used a lithium price, $24,000 a ton. The spot price is $12,000 or $10,000, whatever it was at the point in time. Folks, I just want everybody to remember, there is a very, very big difference between a spot price, right, that is at any given point in time occurs for any amount of reasons, versus an incentive price that is going to bring in new supply.
Sure.
You have to understand, again, going back, the salars of South America that have been around forever, right? Pump the brine up on the ground, let it evaporate, hit it with bulldozers, take it, upgrade it, turn it into batteries. That's in a world before EVs started really coming on. Now you have the Australians with our hard rock, right? So this is stuff that's easier to concentrate. The grade is on the order of, I don't know, call it 20 times probably higher than all of the clays that you see out in Nevada. The problem is, of course, is that they need to be concentrated even further. And it's the Chinese who've been financing it or owning the plants that do that, all of that going forward. Again, as we get into now, I would argue the middle innings, the start of the middle innings of sort of the lithium story, getting into 3 years away from 2030, where everybody's been looking at it, it becomes very, very apparent that we need to have all of the clay projects. And this is where the U.S. comes in, right? Because people can argue about DLE and the Salton Sea and the Smackover Formation, et cetera, but they're not on yet. And then, we've got Thacker Pass that's coming in, along with U.S. investment to start the clay. I would argue to start the birth of the clay era. If you look at all of the PFSs, PEAs, DFSs, right, for the clay projects, this is ballpark, but let's just use it. There are $22,000, $24,000 lithium prices buried in these reports that will give you IRRs that are 20% plus kind of stuff. All right. Net present values, billions of dollars, with some sort of a ratio that would be acceptable to CapEx. Of course, as I said earlier, I think we've got the best one out of everybody. We've got almost a $7 billion NPV. We've got an IRR of 32%, a payback of less than 3 years. But even if you just take us out of the equation, you see this cluster of all these other projects, and let's call it 20-25% IRRs. And I would argue that's showing you, that to me is sort of a good estimate of what the incentive pricing is needed. That's an acceptable IRR to get people involved with these projects. If you're going to risk billions of dollars, you're not doing it for 7 or 8% rate of return. So, over the course of the past 3 months since the middle of the summer, we've seen movement now. As I said, I think we bottomed out maybe $7,500, $8,000 a ton lithium prices. Now we're almost 14. You see how this acceleration, you could soon quickly be at $20,000. People are not going to be looking at these $24,000 prices embedded in these technical studies as any great leap, right? And that's the point. I think that's that will trigger the momentum. I think $15,000 honestly might be it, and just because it's a trading number, nice round number, where people will say, hey, yeah, you know what, we're through the worst of it, and things are getting settled down, particularly in the U.S. in terms of the EVs. We know what we're up against. We start to see these AI centers come in. And hopefully we finally get to take a little bit of the juice from the gold and the silver people who arguably deserve it because they've also been
Sure,
out in
sure,
the wilderness for a long time.
sure.
So that's the big sort of the big picture. We're sitting here. It looks like we're getting ready to launch at the macro scale. You know, to me, when I look at $100,000, 100,000 tons a year coming in incrementally from EV demand and electronic storage, you know, every year for the next 6 years, I just don't see how supply is going to keep up with it, particularly when, again, you got to sort it out between China and non-China. Now, what have we been doing at Nevada Lithium? It's good to have, I think, these retrospectives just because as you go throughout the year and, you know, we're talking about one piece at a time, obviously, I always try to put that into the context of what we're doing as a whole. But obviously, the calendar year provides you another, I think, opportunity to say, hey, look at what we've done, look at what we've accomplished.
Sure.
It's been a tremendous, tremendous technical year of de-risking and I think of showing the value that we have at Bonnie Claire. Just to take you back quickly through the time, and I won't go through all the details, but remembering that essentially at this time last year, we were still getting the last of our drilling results from the 2024, right? And these were drill results where we decided to go deeper because we had noticed that the highest grade lithium that we had just seemed to be laying along the bottom of the holes where we were, not wanting to sterilize anything, right? Which again, if you're new to it, sort of means you don't want to basically end up building something on top of your very best deposit because then you can't get to it, et cetera. You want to know what's there, basically. So we drilled all the way to what they call the basement, which is where we would, it's the formations that haven't been altered. Okay, it's like where you're not going to expect to see anything more. So we drilled to the basement, and of course we kept finding this very, very large in terms of vertical depth blanket of high grade lithium. And this is the kind of stuff, remembering our press releases, 5,000, 6,000, 7,000 ppm kind of stuff, right? And then we had the boron. All of a sudden come in and we're saying, oh, what's going on? And immediately we thought of Rhyolite Ridge, right? Ioneer's project up there an hour or so to our northwest. Okay, what did that do? Well, then what we had to do was say, hey, look, might be new metallurgy, and we certainly want to see if we can get value for the boron, which turned out, frankly, to be something that was a smart thing to do because it took our costs way down. That took us sort of into February, get through the metallurgy. And then from then on, it was working on that PEA. And I can't tell you how many different things go on, or go into a PEA, everything from the mining rates to what you call capital versus what you expense, what's the proper grade to put through it, all of these sorts of things, right? This is just a huge exercise. The PEA, of course, is filed up on CDAR Plus. You can read it, 300-page document, these kinds of things, but they take, pretty much everything into account that you can think of. And of course, when we released it, again, looking at all our colleagues, particularly in Nevada, I didn't see anything that could equal it. Again, just to refresh everybody's memory, 60 plus year mine life, 60,000 tons plus a year of lithium, 120,000 plus tons a year of boron, IRR 30+%, NPV almost 7 billion on an initial capex of 2.2 billion kind of stuff. I mean, tremendous ratio, tremendously effective at deployment of capital in terms of the amount of capital you needed per ton of lithium production. And a lot of this is, the consequence of the geology we had, which of course is this blanket of very, very high grade lithium and boron that we could capture the value of. But also we're doing a lot of playing around with what's the proper size for this. Where does it make sense? You have certain fixed costs that you can't get around. What's the best size sulfuric acid plant that you want to build? These kinds of things. And that all went into it. And we were obviously very, very happy with it. And then it was very interesting because it was right around that time, I think, that the other critical minerals started to really come into focus. And if you've been looking at our sort of investment deck over the past couple of years, you'll see we've had a timeline in there, sort of the back and forth between, in particular, the US and China, having to do with critical minerals, rare earths, right? Not all rare earths are critical minerals, but, the other way around. Not all critical minerals are rare earths, but not the other way around. But, it was the back and forth of China and the US, we don't want certain things used for military grade weapons or for computing, all this sort of stuff. And it was looking like China was starting to put export restrictions on some of these materials, which in fact then they did. And then the US has retaliated with, tariffs on certain other things. But the point in all of this is that all of a sudden the focus is back on, hey, the US has got to develop these sources of supply for a lot of different materials. One suite of critical minerals that we've seen in some of our assays was rubidium and cesium. And these are used in the optical industries. They're also used in armor, along with boron. Boron is a big thing as a critical mineral for hardening agent. And we noticed, we had it in the assays, but we also noticed is that from our preliminary work with Cameco, that the cesium and the rubidium was basically surviving in the pregnant leach solution. And what that simply means is that at Bonnie Claire, as in basically almost all the other Nevada projects, you take the dirt, you put it against sulfuric or hydrochloric acid, something like that. That's what unlocks the lithium, and in our case, the boron. And it'll unlock a lot of other stuff. The question is, does it end up locking other things up in ways that you later can't get them? Which might have meant that, hey, cesium and rubidium might be something what we can't get. But the first indication is that, hey, it was in the pregnant leach solution. We think we got a really good shot at being able to grab that and hopefully add some value from it. And we made that announcement, I don't know, I think it was September or whatever. The heightened interest on the critical minerals then brought us basically into a relationship with a Korean company called Lithium, whose business it is to upgrade essentially technical grade lithium into lithium hydroxide or lithium carbonate. And the reason I bring hydrolithium, into the discussion is because it basically is an illustration of the technology transfer that I think is now occurring very, very quickly in our sector. And the way I like to frame it is you sort of think of the separation of church and state at the very beginning, where you have brines and you had direct lithium extraction, which became sort of like that was, the cool stuff, where we're going to get lithium out. We're pumping the brines out anyway. We could just put a black box on it, et cetera. And, we can grab the lithium, et cetera. And this is going to be a slam dunk. We've yet to see it. However, if you think about it sort of conceptually, we create a brine, right? We create something that's got lithium, in our case, boron, floating around in it, along with other elements. And the idea is, can we do certain things to that quote unquote brine that we have as a secondary step to extract these elements? Or maybe we could reduce the cost of the lithium and the boron to get it out. And that's where hydrolithium came in. And they've been doing a lot of work on it, a lot of very interesting work. And at some point in time, there'll be a story, I think, that we'll be able to tell. I will tell you that it's very interesting when you're dealing with technology companies and you're talking about Canadian reporting standards, 43101, all these things, what you can say, what you can't say. You really got to work at it. And so I'm just telling you, it's something that's going to probably take a little bit longer than I would like it to take. But there's some very interesting stuff going on. And we have some very interesting stuff going on with other technology providers that we don't have basically a non-binding LOI or MOU signed with. So the point is, don't think about this whole sector as sort of being the way it was, for lack of a better word. This whole, brine in one place, clays in another, hard rock in another. There's this crisscrossing of technology. And I think it's going to serve to basically come and bring everybody's costs down. I really do. Now, what can we get for rubidium and cesium? I don't know. If you want to pick like two of the more opaque elements out there in terms of pricing, even more so the boron, which I found very hard to believe, cesium, rubidium would be it. However, they are definitely part of the expanded suite of critical minerals that have been designated by the U.S. government. I think it went from 60 to 70. We also have some very big ones. Silver is now on there, obviously. But if you think about Bonnie Claire, right, you think about our project, I think we're starting to move past the point where, first of all, we were just a lithium producer. Now we're lithium boron, and it's still using our pricing assumptions, 80% lithium, 20% boron. But now with the potential for cesium, rubidium, these won't be huge tonnages, right? Because the grade of this stuff is not is not huge in comparison to what we have. I mean, you're talking about hundreds of ppm, right, versus thousands of ppm in terms of the lithium and the boron. But the point is, at Bonnie Claire, we're going to take all the dirt out anyway. So now it just becomes a question of recoveries. That brings me to another point about Bonnie Claire, again, if you're not terribly familiar, which has to do with the borehole mining technique. Now, this is a technique that's been used at Cameco at Cigar Lake for many years, and essentially just involves going down to whatever depth you want to and circulating a drill rig stem with, and you're squirting high pressure water out the sides. That's essentially what you're doing. And you're creating, in our case, mud, and you're going to pump the mud back up and put it through a plant. The beauty of this borehole mining technique, and we think it's going to be very applicable to Bonnie Claire, is that it allows you to get very quickly to a target depth. So, as an example, if you were digging an open pit, just think about it conceptually again. If something, you want to get down deep to something where you've got a layer of, I don't know, gold that you just have to get to, you're going through those top layers first, right? That's stripping of overburden, or it's going to be at whatever year it is in the mine life. You just simply can't get there quickly. Borehole mining provides the opportunity, we think, to do that basically instantaneously, right? So maybe it takes a couple of days to get down to 1,000 meters or 800 meters or whatever. We know from our drilling, our rate of penetrations, it isn't going to take much longer. Once you get down there and you start essentially the excavation, remember what I've always told people before, this material is not hard. This is not granite. This is dirt. I mean, it's essentially somewhere between dirt and rock, and it turns to mud. You can take the core, you can crush it in your hand from 1,000 meters, but you make a slurry and you pump it up, and you use basically airlift, which is, you're just putting air bubbles in there to increase the buoyancy of the dirt coming back up. And the folks who developed this, essentially for us and recommended to us, said, stuff comes off the seafloor at much greater depths than what you're talking about. So we just don't anticipate a problem with that. But that borehole mining, I think, is going to be something that people are, even though they think it's a technical risk right now, my gut just tells me that it's going to be something that is going to be viewed as a real opportunity. Not only by investors, but I will just say that I've been having talks with different components of the government about the applicability of this to borehole mining for basically the recovery of critical minerals. Now, it doesn't mean anything's going to come of it, but I'm just telling you that is a focus of interest for basically the very reason that I just told you about, and that's the ability to get somewhere quickly and mine it. So we'll see what happens with that. So we've gone through all of this. We're standing here with an excellent PEA. We have hydrolithium that's going on. We have the expanded critical minerals list. What do we do next? So we have a winter program that's basically underway right now. And this is a program that's basically, it's going to help us determine, what we're going to do for the next big projects going forward, or big program going forward, because we know what we have to do right now in terms of sort of your standard stuff to get to pre-feasibility study, okay? We know we have to drill more holes, even though our resource already, right? Again, I've said this before, we're second only to Thacker. And if we want to go into a nuclear arms race, I feel very confident that we could win in the end. But what is the point? We got a 60-year mine life already with 60,000 tons of lithium coming out of it. And we're open in 3 directions. Honestly, if we need incrementally more, my guys are not concerned at all from a geological perspective that the stuff is there. But by the same token, when you go from PEA to PFS, you got to move this stuff up to indicated, status. You're going to increase your geostatistical confidence. So we got to do some infill drilling. So we know about that. We know that we have to take the metallurgy up to a larger scale from bench work, things like that. The big thing that we have to do, though, where we think we could really cut costs, is if we don't do a borehole mining test before the completion of pre-feasibility study. Our PEA recommended it. However, it's really going to depend on who's going to write the PFS as to whether or not it ends up being necessary. So to that end, one of the short-term things that we've already engaged in, and we just put out a press release about it, is we engaged an international, basically, mining firm, and I can't name the name because unfortunately, when you deal with some of these companies, their ability to clear press releases with their names in it can take weeks, and we just don't have the time for this kind of stuff. So, take it from me. This is a very well-known global mining consulting engineering firm. And they are looking at this very question about the borehole mining. Specifically, we said, hey, are you folks comfortable with the fact that, we don't need to do an in-field test, do it after PFS, but we really don't want to do it right now if at all possible because of the cost and the additional time. And these folks have got, experience with Cameco, other places that have used borehole mining that aren't as famous, et cetera. So we're very confident in the level of the professionals who will be helping us make this determination. And I expect that we're going to hear about that, in the relatively short period of time. I would assume in January, maybe towards the end of January. That's obviously going to have a very big impact on, capital raises going forward for the PFS, how we think about the timing, things like that. So that's part one. Part two of this short-term winter program is we've basically let Cameco up in British Columbia, Vancouver, get going on advanced metallurgy in terms of looking at the cesium and rubidium, right? So we made the announcement. We see this stuff in the pregnant leach solution. What kind of recoveries do you think that we can get at first glance, at a first swipe? And so what we're going to be doing is using some ion exchange stuff, looking at resins, different kinds of things to see what can be captured. Now, it's going to be proof of concept. When you think about, again, 43101 standards, if you want to start assigning economics and all this, what that would mean is that we would have to go back and redo the PEA yet again. We really don't want to do that. And frankly, I don't think that the impact from the rubidium and the cesium would be big enough to warrant worrying about that right now. The way I would think about these things, if I were an investor, is that we get positive news. You start to pencil it in yourself. And it's not terribly hard to sort of, use the back of an envelope, say how much would a circuit cost, to basically just throw all our material through on the way, maybe after the lithium, after the boron, what would the CapEx be, what's the incremental OpEx, et cetera, and see, you can calculate yourself, or at the very least get a good idea of what the incremental, gains would be. And that's the way I think that we should look at the cesium and the rubidium. But I also think that from the perspective of if it is a good number, and what's a good number? I don't know. I'm just swagging it here. I'd be happy probably for about 60%, something like that.
Sure.
It's something that the U.S. government wants. So again, putting it all into the context of the greater Bonnie Claire Lithium project, it's more optionality. Also, and I'm just telling everybody this, even though we're not working on it right now, I'm not convinced that potassium is out of the mix here yet. And potash fertilizer is now in the critical minerals list. So we'll see. But for right now, cesium, rubidium, maybe we'll be surprised by something else. But I expect Cameco is probably going to be in a position to tell us something also in January, maybe early February, but I'm hoping January. So that's number two. And then the third thing for right now that's going on is we're doing some work with academics over in Italy to determine sort of what is actually hosting the lithium. To most investors, I'm going to say it's not the most important question. But I will tell you that from a professional standpoint, in terms of the lithium industry, from recoveries, for projecting things forward, it is pretty important. And it's not just Nevada Lithium that sort of isn't 100% sure where the lithium is. Is it embedded in the clay matrix? Is it absorbed on top of it? All of this sort of stuff. What was the original determination of it? My guys have got different sort of theories on it, variations. They're in accordance, but there's variations on the theme. And we're engaged with a pretty heavy hitter out of University of Naples, who's written some stuff about Thacker Pass, and he's very, very interested in finding out about Bonnie Claire. He thinks that it's going to be unique, and I'm not going to steal the thunder on this. What I'm hoping is that the results are out in time for PDAC. For those of you who don't know that, PDAC is in early March. Toronto, it's obviously, or arguably the biggest trade show out there, exploration development, everybody goes there. Sure. And Jeff Wilson, our VP of Exploration, has submitted a paper about Bonnie Claire, which was accepted. So he'll be doing a presentation on it. And these are the kinds of things that, again, I'm telling you, and I've told the story many times about the conferences that we go to. I'll go off to one-on-one meetings with investors. I'll come back to the booth. There's Jeff. He's holding court, and he's got, 6 or 12 people from all the big boys, right? Because there's a professional level of curiosity about Bonnie Claire that is tremendous.
Sure.
It's because it's high grade and it's huge. So, if they determine, or if they can accurately predict, sort of where this very, very high grade is coming from, how it was formed, et cetera, it could arguably help us target it even more precisely when we drill to recover it or when we drill to explore for it. And I think it's fairly evident what the benefit would be like that. It would be cost savings, it would be time savings, all this sort of stuff. So I think that's going to be a pretty neat thing that's going to be helpful as we move forward with the de-risking of the project. And it's certainly going to be something I think that's going to just give us additional attention going forward. The fourth thing I'll just throw in there, we didn't put a press release on about it because I haven't been able to crack this nut yet. The one big beautiful bill in the U.S. still has got some tremendous tax advantages. If you could get things into production by, I think it's 2031, 2032, which I would argue we're still in that ballpark and we could do it. But I have, in my efforts, been trying to find somebody who can help quantify, or at the very least, put out a news release that will give investors some idea of what the possibilities are. And the only reason I bring it up now is because I think it's a fairly big thing, but it's, again, one of those squirrely things where if you can't release it in a certain form according to Canadian reporting standards, it does us no good. And if on top of that, certain law firms or accounting firms are saying, hey, you don't want to be too precise about this because you could draw the ire of certain entities in the future, it's a weird thing. And I'm not sure exactly how I'm going to crack that nut yet. I'm still trying to figure it out right now. But rest assured, I think that one big, beautiful bill is somehow those tax provisions are going to make their way into deals that go on in the lithium space because, the ability to expense stuff instead of capitalize it is just huge when you're talking about billions of dollars of CapEx. So I'm going to wrap up sort of my remarks right there, just with, again, where I started. Folks, this is a tremendously undervalued asset. I hate the fact that we're languishing here at 17, 18, whatever cents it is. We had that little blip up at the beginning of last year when we got up on the Toronto. We haven't been able to sustain the momentum. This asset, the value can't be ignored forever. I just simply don't believe that it can be. If you believe in EVs, if you believe in, the electrical storage, going to uninterruptible power, whether it's hooked up to the grid, whether it's renewable energy, the AI data centers, whatever, you need the lithium. And this lithium is not going to be coming from Africa. Not if the demand, if the demand's going to be satisfied in the U.S., it's not going to be coming from, I hate to say it, South America or Africa or these other places. And, you've already seen projects falling off. You look at Rio and Yadar in Serbia, that's now off the table. And you see, in fact, it'd be interesting to see. I haven't talked about Boron much, but Rio is now basically selling their Boron assets. I would argue there's a reason for it. Obviously, Rio is rationalizing, they got a new CEO, they're undergoing a reorganization, et cetera. However, it probably gives us another opportunity. And I have had people who know quite a bit about boron say, don't be surprised if a lot more value to the project comes out of the boron than what you guys are thinking. And again, we used a very conservative price. So if you're an owner, you're sitting here with a piece of arguably, the second largest, certainly the highest grade lithium resource. And I get tired of some of my industry peers saying they're the highest grade. But when I look at the spreadsheets, unless we're looking at somebody's technical reports wrong, we're the highest grade in terms of what we're throwing through the plant, and also in terms of just overall grade in our lower zone. Nobody knows about us. We're trying to work ourselves through that. There's certainly a malaise in the markets, I think, about lithium. Unless you happen to get U.S. government investment, I still think not many people care about what's going on, but I think that's going to change. I think we're looking at the precious metals. They've ignited everything along with copper. I think as inflation comes along, you're just going to see a rotation even more so into the commodity sector. And the technology, that's going into these EVs is just too good to ignore. I think you're going to see it all here in the US. And as soon as that crack in the dam appears, forget about it. The dam's going to burst. And now let me end it there because I don't even know how long I've gone on for. Sorry, Romeo.
No, that's great. No, I appreciate it. And honestly, you answered almost every question I was going to have for you. So I think that's great. But there were some questions from the audience, which I would love to tackle. So first, somebody wrote in over email, and they note, I think fairly, with the speed of innovation we see, is there any worry of yours that during a 60-year mine life, that lithium could become less important in battery manufacturing? And given that possibility, would doubling manufacturing and reducing mine life to 30 years be a potentially prudent way to reduce that risk?
Absolutely. A 60-year mine life that's a tremendous mine life, right? And again, the economics of what we presented are on 40 years, right? And that's just because as you get past year 40, the value, that net present value, that incremental dollar is de minimis. So it's really not worth bringing in the calculations. But the way I look at it is, the natural advantage that you have with lithium is of course, its value in transferring electrons, right? It's that lightweight that it's the periodic table. And we've seen other things, solid state batteries, sodium, all of this sort of stuff. But lithium is here now. And I think the way I'm thinking about it anyway now, the real ramp up is coming, say, within the next decade. And I just don't see anything else that's going to supplant it. And you've already had additional demand coming in for electrical storage. Okay, if you want to argue that in the EVs, it hasn't been as great as what it was thought it was going to be, which frankly, I'm not sure I agree with, but nobody foresaw these AI centers coming in the way they are. There's a whole nother thing about the electric trucks that aren't going to be there. All of this stuff is really slated, I think, in say the next 10 years. And I don't see anything that can take the place, honestly, of lithium in that time frame. To the Bonnie Claire asset, absolutely. The beauty of what we could do, again, this comes back to that borehole mining, right? Say you want to double, if you want to double production from an open pit, you've got to start laying back those sides quicker to get down deeper, et cetera. Obviously, if you're going to have more throughput, you got to double the size of your plant or whatever you're going to do. So we would all be in the same boat. But I think the beauty of that borehole mining is what we would do is just, you get another rig, right? You get another drill rig and go stick it out in another high grade area. Remember, when I look, let me put it to you this way. One of the arguments that I hear about, borehole mining is that, well, it's never been done at this scale. Well, my point is that one rig does not depend on the other. It's not like, again, with an open pit where you got to do a certain bench before you can get to another bench. If we want to put one rig a mile to the west and one a mile to the east, we can do it. We want to put 6 more and we can do it because one rig's not affecting the other rig, right? They're basically just taking the cylinder of material out, pumping it to the surface, and we just got to connect the hoses to get them to the plant. So to me, if we want to up the mining rate, we could do that very quickly. It just becomes a question of how quickly you could upsize the back end of the plant. And when you build these plants, you try to do it in a modular way, right? You try to do it so that your footprint for 10,000 tons is something, and if you want to double it, well, there you have it, and on and on and on. And that's the way that we would do it. I think lithium prices are going to have to continue to go higher over time. I don't think that 24,000, frankly, is a long-term price that's going to stay there because I think demand's going to outstrip it. And in that case, I would expect that we're probably going to, we would think about basically taking the production rate up higher for those very reasons that I just mentioned. That's how I would think about it.
Oh, awesome. And somebody in the chat echoes, say they don't worry about the next 10 to 50 years for lithium demand. The stock will be a winner, a huge winner, or a loser within 2 to 4 years. So he's bullish.
Thank you. Yeah, exactly.
There you go. I do want to go through some questions that came in just live through the chat. One is if you could discuss the level of interest in Bonnie Claire's boric acid, and if there's any way you could get upfront cash for offtake from that.
For boric acid, I'm not sure about getting offtake for it right now. And we haven't gotten frankly, too deep into that right now. I've mentioned this before. Boric acid, or boron, I should say, is a very, very opaque type of a thing. I'm not sure that boric acid is necessarily going to be the final thing that we make out of Bonnie Claire. And the only reason I mention this is because of some of the technology transfer that we're talking about. Yes, we have it modeled out in the PEA for boric acid, but there are other compounds that might be more valuable on an MPV basis. So maybe they don't necessarily have the price, but maybe the cost is lower. And we're just sort of starting to get into that. As I said, we used for boric acid pretty much the spot price when we did the PEA. I think it was $950 a ton. Other folks, I think Ioneer had been using, like, I don't know if they were using $1,300 or $1,400, and somebody else, I can't remember if it was 5E or whoever the other person who's just doing the boron, somebody's using like 2,300. Those folks may be right. We're already getting $2,000 a ton, basically. I think it's 1997 off of our operating cost for a ton of lithium. So we're pretty happy with that contribution. Do we want it to be greater? Sure. But it's just like anything else. In particular, if Rio's going to, maybe something's going to come off the market with that, with those assets being sold. If more capital needs to be put into that, people don't want to do it right away. I don't know. Frankly, I'm just making that stuff up right now. But again, it's all the optionality, right? It's the same thing with the cesium and the rubidium. If we prove it at a certain level, with what Cameco does that give us the opportunity to sell royalties on it? Maybe it does. A lot of this is also finding the right people. And I'm not kidding when I say finding the correct partners for this stuff is really, really daunting, particularly when you're in the depressed sort of price environment. And even though we're talking about boron, we're looked at as a lithium project because, of course, we are. 80% of the revenue is coming from lithium right now. So that is one of the things that we're going to continue to explore, obviously, as hopefully along with cesium or rubidium, in terms of ways that we could get cash up front. Because right now, what are we trying to do with our stock price where it is? We're making every dollar count that we can, try to get incremental good news out. We're trying to minimize dilution to the extent that we can, and play this one step at a time. We're very, very cognizant about dilution. We don't want everybody's share of the pie to get smaller just because of the timing of all of this. So it's a good question. And hopefully I'll have more to say about that in the future.
Awesome. The question on macro, I think we've already covered. You touched on this, but I think I might as well address it head on. As somebody writes, they've learned that it takes years, not just months, to find a meaningful MOU or LOI with a strategic partner. So he says, even though he knows probably isn't going to happen for Nevada Lithium until maybe 27, just talk about the status of the initiative, what conversations are like, that kind of thing.
Yeah, I would say is you have absolutely no idea when something is going to manifest itself into something tangible, meaning where cash is going to exchange hands or some sort of a deal is going to be done. I will tell you that obviously when the commodity prices are going against you, it knocks a lot of folks out. I mean, just frankly, look what's going on with Ford right this second. There's going to be some delays. We've been, talking to Ford, frankly, to other car companies. I meet them at conferences. Some people I have private conversations with. I won't tell you who I have with that because we have NDAs. But, over the course of the last couple of years, I'll bet you I probably met with, I don't know, 2/3 of all the big car companies, not the Chinese car companies, mind you, which is something that, I sort of hope to do. But, all of the major players that you would expect to see, let's just say in the Western Hemisphere. Mm-hmm. And these folks, they put their heads in. Now, what do you have that I would say is sort of taking place right now? Well, you have this whole thing with scarcity of critical minerals and wanting to secure supply lines. So now you get a lot more interest from the DOE, right? The Department of Defense. What's different? Think back to the Inflation Reduction Act. I talked to a lot of people about this over time. The problem with all of these loans that you heard about, right? You had a couple that were, at sort of the ending stages. You had Ioneer, you had Thacker Pass. Those loans were put in place, but nothing was really trickling down to exploration development companies. Now, if you were a technology company or you were a recycling company, then that was a different ballgame, right? And a lot of money was getting thrown around. Now the IRA is over, but now with the Department of Energy, the Department of Defense, you're starting to see specific programs or possibilities for funding that are coming out looking at mines, okay? So it's sort of a whole different ballgame. This is a very, very dynamic environment. And all I can tell you is one thing. It always takes longer than what you think, but you just simply never know when the opportunity is going to emerge. So you got to stay in it. You got to keep talking to people, and just take, what do you want to hear now? What can I explain to you? Because remember too, this is new to everybody. I've said this many times over the years. You talk to a car company, a purchasing agent who's used to getting the steel, the aluminum, whatever they need is sort of like, hey, I need this quality, I need this tonnage, whatever. I come along and I'm like, hey, you got to help us build the mine. They're like, what the hell are you talking about? Right? This is totally new stuff. Well, now with the Department of Defense, Department, of Energy, you're talking to engineers, et cetera. They've never been exposed to the economics of building a mine, why it's necessary to have capital. They're going through it from the way they understand stuff. So it's all a huge exercise in education. It has been, frankly, for 4 years for me. But to me, the audience is getting bigger, and that's a good thing. So I wish I could tell you definitively, hey, I expect this to happen in such and such a time. But I'll tell you what, I've seen too many CEOs get burned, and I couldn't tell you in good faith that I thought something was going to happen, because I'd probably be proven up, look like an idiot if I told you.
Awesome. No, appreciate that answer very much. I got two quick ones left. One is, how does Nevada Lithium plan to avoid excessive equity dilution over the next couple of years?
Well, the big things is offtake, right? I mean, that's, and just because it's not happening now, as I just mentioned, doesn't mean it isn't going to happen. I just can't tell you when. But that's the biggest thing. Things like our short-term work program, if we can knock out, right, that borehole mining test until after pre-feasibility study, that would knock out about half the overall cost of our PFS. That kind of thing obviously would have an impact on minimizing dilution. Do we, maybe we don't do big raises all at once. You say, okay, what do we need to do right now that would still keep us in the time frame of production, say 2031, 2032? Remembering that, you always go through the standard sort of, okay, PEA, PFS, FS, all these decisions. And in a rational world, I'd argue that you would stick to them. However, in a world of scarcity where people want stuff now, there are certain steps that can be done concurrently or can be skipped over. That's just the reality. And I'm not saying that we would advocate it, but I'm just saying it's all possible. And that's why I think as we sit here at the end of 2025, it's possible we could still be getting into this 2031 timeframe if everything went right, if all the financing in the world was there, et cetera, et cetera, et cetera. But dilution is, it's about being opportunistic. There's no trick to it when everything is going up, et cetera. When the time is right, we have 3 sets of shareholders, of concentrated shareholders, who've been through this, been to the rodeo a number of times, are very cognizant of it. I think we have some warrants and we might be able to cash in. We're just going to be judicious about when we need the money, what we're going to do with it, and probably not try to get, huge hunks at a time until the markets start to behave a little bit better, and hopefully that'll be relatively soon.
Great. No, thank you. There's one just advice from the chat. I said they'd aggressively go after Korean and Japanese lithium-ion battery makers and OEMs, not Chinese, just because of the geopolitical questions. So there you go. Just throwing that in from the chat.
Yeah, no, and that's an excellent point. And the only thing that I think might be interesting is I wouldn't, to me, it doesn't make sense to get involved with a Chinese manufacturer who's producing stuff in China. However, you see all the CATL battery technology that's being licensed, being used by Tesla, by Ford, right? And those big battery plants I just mentioned and others. Like, it's here already. Now that's licensee technology. But what I'm just referring to in terms of when it comes to the Chinese is, again, specifically, I think the automakers sooner or later, they want to be part of the U.S. car market. To do that, I think the way it looks like it would have to happen is they would have to JV with U.S. manufacturers or other U.S. companies, whoever it might be, from the position of minority ownership. And then it would be like, here we go. Nobody's putting any thought into what kind of demand that could, basically turn into, and what would be better than to complement, basically all of these new cars that are majority owned by U.S. manufacturers being supplied by lithium coming out of Nevada. And that's sort of the way I think about the Chinese specifically. But the Japanese and the Koreans, for everything else, absolutely. They've committed to large investments, right? You've seen those announcements over the course of the past 3-4 months. Certainly, and we want to be part of that if possible.
Great, thank you. Last question I just want to tackle. It's a quick one, but it's a curious one that I'm actually curious about as well. It's somebody asked, do you have any idea why Albemarle hasn't invested in any of the other Nevada lithium projects, companies, yours, LAC, Ioneer, Century, etc.? Why do you think that lack of interest from Albemarle is there?
I think, as a producer, I think they've got their stuff in their pipeline. And I don't know to the extent that they're brownfields, greenfields, what that all looks like. But it's like anything else. I'll just tell you, dealing with a lot of these bigger companies, these bigger mining companies, their pipelines have been in place for a while. And if you have companies that haven't really undergone, like Rio, right, is now undergoing a transformation, I would argue, right? So things are going to get shaken up. In this particular case, looks like they're going to rationalize away from a lot of certain lithium spots. Maybe they're going to concentrate in South America, whatever the deal is going to be. Albemarle's got the same sort of thing in place, and these folks right now, the producers can sit here and they can also control prices, obviously, by tweaking production, making decisions about stuff that is clearly more near term in terms of their ability to bring on than, say, greenfields or brownfields. Well, the greenfields project, say, like Bonnie Claire. So I don't think they feel the need to do it, I guess, is really the short answer right now. The clay is something different, obviously, than what it hasn't been done commercially yet. I still think to a certain extent there's an element of prove it, let's see it. That's why we all root for Thacker Pass to come to fruition. There's just a lot of back and forth. And as I've also told this story many times, when I talk to car manufacturers and they say, talk to them specifically about offtake. Well, we're not exactly sure what demand is going to be. It's like, you guys are the ones who are determining demand. Well, my point is, if the car manufacturers can't determine demand, what shot does Albemarle really have? You think that they're in a better position to know what demand is? And I would argue, no, they don't, right? Yeah. So they're going to play it a little closer to the vest. I think that you want to see, or they're going to want to see, trends established in terms of pricing. Yeah, we've come off the bottom. But, I think there's also hanging over people's heads, is that one Chinese mine going to start coming back on? The Chinese trader is going to do this again. They're going to hit again. Remember, folks, the big elephant in the room is the bifurcation of the lithium market into China versus non-China. Nobody's talking about that because, of course, there's no non-Chinese involvement, of lithium production. Once that, discrete market pricing mechanism is put in place. So, and I'm making this up, China's 10,000, the US is 15,000, China's 13,000, the US is whatever the numbers are. Until that really gets established, it's just going to be this sort of opaque thing. But why would it turn around? Why, after all of this angst, would the US say, oh yeah, it's cool, we're just going to start using anybody's lithium? I just don't see it. And let me do you this. Do I have a second? Yeah, I'll give you 1 second on the politics, right? If let's just say that in the midterms bring along the Democrats take the House. If you're not familiar with U.S. Politics right now, the Republicans control the Senate and Congress, right? The House of Representatives. There's a lot of talk that the Democrats might come in. Okay, fine. What does it really do just for this sector? Forget about the fact that they'll just impeach Trump and probably nothing will get done, right? The IRA, right, the Inflation Reduction Act, previously under Biden, tried to do one thing. Everything that's being put into place under the Trump administration is trying to do another thing. I don't for a second believe that all of a sudden, if the Democrats came in, and let's just say in another year and a half, there was a Democrat president who won, that they would try to take away security of supply, right, for these critical minerals. I would think you would just see another Inflation Reduction Act come in. I mean, this, folks, once this money gets put in government, it's very, very hard to get out of. And I was saying that before Trump, and he managed to cut some of the stuff out. There's no doubt he did it, but a lot of that money is still there. So my point is, I don't think there's any turning back. The technology is just too good with the lithium and the battery. People want these cars. They just don't want $120,000 Ford, E-Volt, whatever, 150s. But they want all the other stuff. And I think as it becomes more available in the US, you're going to see that. And this is just going to be a question. People are going to say, I can't believe we worried about that. So anyway, my last diatribe.
Awesome. Steve, thank you so much. This really, I did think, tied a bow in 2025. I really appreciate everybody. Full audience stayed with us for the whole time. Appreciate your time very much as we get towards the holidays. I hope if you have any additional questions, you'll reach out directly to Nevada Lithium. You can feel free to reach out to Six too. I'll make sure that Steve gets those questions. But Steve, thank you so much. This was great. I hope you have a wonderful end of your day.
Thanks. Thanks to everybody. Take care and happy holidays.